S&P breaks a critical level, but also reverses on a shorter time frame. Nasdaq fares much better, but gives some confusing readings. We're going to address them. Stocks above the 50-day moving average are on the decline. We'll tell you what to watch for. S&P stocks above the 200-day moving average are sitting on a major key level. The SIBO put call ratio on equities hits a extreme reading. What made it drop 4% today? What Dell, Intel, and IBM all have in common? NVDA begins to roll, unable to break a major support and a major resistance. We'll show you how it's boxed in and what to watch tomorrow. Home builders continue to break down. The 10-year continues to rally. A new high for the year on the dollar. We have a lot to go over. Let's get to it. Hey everybody, welcome back. Really important to note the basics. So 4,500 was the level we talked about last night, as well as 4,520. 44.70 is where we closed. We also went over this in the pre-market live today. Just important to note. So the question becomes, what do we do now? Well, there's a couple things to point out before we start drilling into it. I'm going to mark these areas off. You can already see these boxes, and we're going to drill into that in a couple seconds. But what we really need to do is just focus on a couple core things. Number one, on the ES, we're just going to pull up these moving averages that we like to use and just show the basics. We're sitting on that 1222 cross. You should be able to see that pretty clearly right inside that little box right there, and you close below the 55. This is pretty much the exact opposite of what you want to see happen. I'm going to explain why. Number one, here you reject it again. Here you reject it. Then you have 3 to 5 days to get over that. That's usually what you want, 3 to 5 days. This took 1, 2, 3, 8, 9, 10 days before we were over. So that means that this is the prevailing trend to break. So that's what you're dealing with. After 3 to 5 days, that becomes the prevailing trend. All right. So then we break. Then you have 3 to 5 days to stay over it. 1, 2, 3, 4. Guess what we didn't do? 5. The prevailing trend right now is for us to be below the 55. This is how I look at the world, and this is how I make demarcation lines. I find it extremely helpful to do that. Now, that does not mean you're going to fall out of bed. One of the things that we've been talking about is with what we're seeing right in here, for example, if we go and take a look here before we drill into this and get into our little dots here, which are pretty pivotal, I just want to go through the basics. Number one, I keep hearing, oh, it's going to be a head and shoulders. I don't know that. Maybe it is. Maybe it's not. Maybe we're going to just sit in here. So before we even know if this is a head and shoulders, just for everybody to understand that this was the left shoulder, head, right shoulder, you need to break the neckline. So you're not going to know till 43.68. I'm not going to be hanging out anyway by the time we get there. So that's not really even on my radar, and I can address it then. In other words, if we're up here and we're going to drop and we get to about that 2.5% level, well, let's just play devil's advocate and say, oh, it is a head and shoulders and we break. That's okay too, because then I'll just wait for the retest if we get one, and then I can start getting involved. But I'd rather analyze what's going on instead of predicting that this is going to be a head and shoulders. There's a distinct difference there. So again, I see it, left shoulder, head, right shoulder. And are we seeing signs that that is an accurate statement? After today, yeah, you are seeing that. I did not want to get below this 55. There we are. The RSI right here is below the 50. I don't want the ES to be below the 50. But before we get into that and some other detail that we can look at, and also probably should take a moment to look at the SPY here, let's drill into this on an hourly chart and get into what I want to show you, because I think this is pretty pivotal stuff. So I'm going to zoom out on the hourly and just show you these boxes. So you can see that I've denoted boxes here that go back to May. And I didn't really want to go any further than that. I just wanted to go back to May. And that's exactly what I did. Now, what we're going to do is we're just going to overlay this. Now, I changed my RSI reading a little bit, but yours is probably going to be very similar. If we look at these boxes that I've drawn here, you can see very clearly that these are all spots where we were grossly oversold, actually the most oversold that we've been. So the top 5 times that we've been oversold on an hourly chart, and if you ever watched any of the RSI videos I did, you want to get under 30 and then you want to bounce through 30. Well, you just went from here, and you look at where that took you here. You can see it right here, right? When do you roll? When you break 70. You can see that right up here, and then you break, right? It gets tired. It doesn't mean you're going straight up. It does mean that you're exhausted, and that when you're at a reading here, which is probably like a 10, we'll drop a line there in a second. And you just take a look at this and go, okay, 1, 2, 3, 4, 5. How did you fare if you went out a month from there? Well, if you went out a month and you bought any single one of these, within 30 days, you did well. I think it's an important distinction, and I think it's something we should pay attention to. I don't think it's the be-all, end-all, but I do think it's an important distinction. And that could mean that people that are short today, myself included, that short a couple names going into this evening, but I need to be very careful tomorrow. I also have longs on. We added longs today, but I do think I need to be careful tomorrow. We are seeing a bifurcation, and we're going to get to that bifurcation in a second. But this is something very important, and now we're just going to drop it. Yeah, I said 12, we're at a 10. I mean, that's absolute insanity, like to get to these levels. When you understand what these calculations are and you start seeing these extreme readings like here, it's not that you get there that's the issue, it's when you break. In other words, if RSI determines the magnitude of the move, and you're up here, then it can only go so far. Go look at Dell on the 5-minute. Even though I loved the stock the other day, I had a 98 reading. Like there's just no way that you're going to go any higher. It's just physically not feasible. Again, tools are like the people that wield them. If you give me a hammer, I can barely hang a photo. Someone else can frame a house. Very different strategies. I use RSI and I use it as a leading indicator. Some people just do not wish to develop the skill set to do that, and they do it with other tools. I find this extremely helpful. Do with it what you will, but I'd be remiss to not point this out to you going into tomorrow, where everybody and their sister is negative, looking at this chart going, well, clearly we're going to break. And could we go lower? Sure. But you need to work that off first. You're going to have to work some of that off, which means we probably rally. Maybe we reject up here again. And that's really an important distinction that we should probably go over as well. And let's drop this out and go into the 5 and just talk about this, because we did go over it in this morning's pre-market where we said this was pretty obvious what was happening here, dropping that line right in here, and you can just see that 45.10. But I'm going to drop that down to that 45 level right here, and you can kind of see what's going on. I referred to this as a mini head and shoulders today. We were going over it pre-market. And the more troubling thing for me yesterday was just I couldn't get through that 20. 45.20, just couldn't get through it no matter how you tried. And then you touch, you don't get there, you try, they give you the flim flam, fail, breaks, can't hold, retest through. You see all this. I mean, I'm just rehearsing what happened. So the question is, what do you do now with it? I think there's a bounce out there, but that hourly bounce can clear itself out by the time you get to 4,500. So what does that do? Well, I think you have to kind of look at these and go, okay, that's 60 basis points. Is that the average bounce that you get on what I'm describing here? Because I think that might be helpful. So in other words, let's say if we went to here and we just said, oh, well, we're going to do this on this day, the middle of the low point. We're going to say 30 days out and go, okay, well, 30 days out, there's 5 days, and now we'll do 2 weeks. Let's just do 2 weeks. Just be easier. All right, so there's 14 days. Okay, so at that particular time, you're up about 2.5% in about 2 weeks. If we took the low, and I'm just taking the low just to make it simple. I know you're not going to trade the low, but it just makes it simpler. I'm not going to get into that one, but you're about 5% off of that. And then you can come here and go, okay, so, I mean, here's 10, 15%. All right, so in this one, you're up a good 4%. So you can see here roughly, and then you're probably up somewhere similar close to that, but let's just do it just so we know. 12, 14, 15, and that would put you here. Let's just say it puts you right here, because you're only 12 days away from that one. So it puts you at the low there, which still puts you at, let's get that there, sorry. Puts you at about 3.5 right into there. All right. So roughly you're looking at a 2 to 4% move, let's call it a 3% move on average if we average those 5 together. It might be a little higher, but let's be conservative with slippage. That's not the worst place to be. And I think we should take that into account. Now, if we looked at the hourly, what I like to do with some of this is just drill in sometimes to a 4-hour and see if we see something that is glaring that we're missing. And there is something out there, and we're talking about this already on the head and shoulders. It becomes a lot clearer, this head and shoulders, doesn't it, when we're seeing it? Again, before you have a true head and shoulders pattern, what do we need to do? You need to break that neckline. I'm not going to be around for that, guys. I'm just being honest. If I break this, I'm more interested in breaking that line, watching it break, then watching it hold in here somewhere, come up, retest, and then from that retest, make money on the downside. I'm more interested in that, to be candid with you. So we'll watch that and we'll see how that goes. If you look at the NQ, you're holding up decidedly better. The one thing on the 4-hour I just want to talk about that I'm starting to see in here develop, I am starting to develop a head and shoulders on the 4-hour. I agree that someone's going to point it out, and always point out the comments, and thank you for sharing these. When you share them, it saves me from having to run sponsors and ads in the middle of these, so I greatly appreciate it that we can just get to the nitty gritty. But if you start looking at this, anyone can see that head and shoulders. This is your neckline, guys. I mean, some people say, oh, well, it's up here. Well, I don't know. How's it up there if this is your right shoulder? It doesn't really look like that, does it? So I do see this, and this is something that I'm paying attention to. I will say this. I will say that the NQ is most certainly holding up better. We didn't get below the 55. You have the cross here. And we had certain stocks. We had a bifurcation today that we're going to go over in a couple minutes here that was just absolutely staggering. And there's some real confusion going on here, and we're going to talk about it. So first and foremost, the dollar is moving higher. And we did close at a new high. And we'd be remiss not discussing that. And the fact that you now have a 22 that has crossed the 12, has crossed the 22. And just means you can see how that 55 starting to curl up, which means that we're probably going to negate this in the next 2 weeks. Now, if we negate that death cross, which it really looks like we're about to, and you'll remember that calculation from the other day, is for anybody new, all these videos are connected. So we start on Saturday and then go through, that way we can review. So we start looking at the numbers over here, and then by looking at those, let's move this over here so we can really get into those numbers and see. So if you look at the 55 where you're at, let's go back a week, and you're at roughly 32, 102.32 on the 55 and 103.10. So you're about 70 cents, 80 cents apart, and you start moving it up and say it's 10 cents, that gives you 8 days, but this is curling up. I understand it's linear and that you're going to actually move exponentially. I get it, but we're just going to deal with the hand we're dealt. We're not going to sit here and do math all night. So you're about 2 weeks away from those lines possibly crossing and getting rid of this and getting a golden cross. What is the issue with that? We do not want a strong dollar. Why? Well, I'm glad you asked me that, because I'm going to point out why we don't want a strong dollar. So if you go and take a look at the market and you look at how the market did in July 2020, around June 2020, when we had a death cross, how did we do? We did really well in the market, didn't we? We were brilliant, right? Fed injects $1.7 trillion in the market. We're all geniuses, buying JPEGs made of monkeys, calling them NFTs. And then this happens, and you start getting there in September. All right. So now what happens? We get a golden cross. Well, what happened to the market around September, October 2021? Well, that's not good. All right. So this entire move, again, so you're telling me that the entire move that we're seeing is based on the dollar and whether or not it's weak or strong? I'm saying it's definitely correlated. Now, as the Fed starts unwinding, it becomes less correlated, but there's still a huge correlation. Now, here we are with the death cross. And since that date, look at when that folds in perfectly with that death cross to when the market started to move. What's happening now? Okay, so I can want the market to go up, and I think that we hit highs by the end of the year. I can think anything I want. But if this starts going and we start getting a strong dollar, and that strong dollar starts leading to rates going higher, which is kind of crazy. And this is what I mean by bifurcation. If that starts happening, equities are going lower. So give you the equation: strong dollar, higher yields, equities are going lower. That's it. It's really that simple. Don't overthink that. That's more of a long-term macro thesis. And you'll remember there are 3 legs to this, right? There are 3 legs to what we do. And I think that's really important for us to remember. And for those that don't know, I'm going to draw this in real quick. I actually have a stool somewhere. Someone actually made me the stool. I guess they didn't like my handwriting, but that's fine. So you have the 3 legs on how we refer to the market, right? And what I'm saying is that out of those 3 legs, and I know they're not even, but bear with me. You're not watching for my drawings. So here's your stool. You sit on that. Sometimes you lean on forward. Sometimes you lean in the back. Sometimes you lean to the side. Macro leg, sometimes we're leaning forward on that, right? When the Fed's injecting 1.7 trillion, then you have your fundamental leg on what's going on with, Lulu. Did they beat earnings? Did they not beat earnings? Technical, where do we stand on the chart? And you shift your body weight on that stool, just like you would sitting at any bar or restaurant. You shift around. Sometimes you lean on one more than another. Right now, I think with the Fed not injecting, we're not leaning as much on them. That does not mean you're not leaning on it at all. So just keep that in mind when I say that. So we understand that. We understand that the VIX is doing this now, and meaning that the VIX is trying to go higher and then falling down. What's interesting about this and why I brought this up, and then we're going to start getting into some names here, but I brought this up today and I thought this was absolutely fascinating. So let me be real clear what you're looking at before people comment. You're always welcome to comment, but I just want to point this out. This is the put-call ratio on equities, not on indexes. It is separated out, and I am pointing out the one for equities. I want to be really clear about that. So it's not total put-call ratio. It is for equities, and it's by the SIBO. All right. I don't care about the indexes as much. I want to know what they're doing with individual names and how are they hedging individual names and are they panicking with individual names? That's appealing to me. And guess what my answer is? Look at what they're doing here and look at what happened today. So then you could say, well, when was the last time this happened? Well, that was Wednesday, August 17th or August 16th. Apologies. Yeah, I don't know what this is. I think they're anomalies. Okay, well, let's call those anomalies. And let's call this January 18th when we went a little goofy. And we can talk about March 10th in here as well. Okay, so let's look at March 10th. And then we can kind of look at August 16th and see what happened to the market on those dates. And so we would drill into this and just go, okay, well, what happened on August 16th? Well, that was right here. Okay. And then what happened a couple of days later? Well, we put a bottom in right after the Fed spoke, the Powell spoke. All right, so we kind of put a bottom in. So you can look at March 10th and go, well, what happened on March 10th? Oh, well, we kind of put a bottom in right around there, didn't we? A couple of days later. Yep. Okay. So usually when this spikes, to extreme readings. Now, how do I view this as an extreme reading? I think these are anomalies. Perhaps they're not, because that's around the regionals. But we're going to say they're anomalies because of how they look, right? They look at the wicks. Nonetheless, we're using March 10th. We're using this date and saying, if you go back to January, this is the third highest reading on not total call, but on put call ratio for equities on the SIBO. Well, that's an interesting statistic as well. And that kind of fits with what? It kind of fits with what we were talking about with the ES and the RSI reading that we were just discussing. And that was like the fifth reading. Then you kind of go back and go, geez, I wonder if any of those readings were around that same time. You kind of drop in here and it might be interesting for us to just take a moment and look at that and go, well, not really. No, that really wasn't there, but it was here, wasn't it? Yeah, it was here, but that didn't give us the right RSI reading as this one did, but now it wasn't there. How about March? Was it there in March? I'm come back, we're going to May. Well, we'd have to drop that in now, won't we? Let's drop that in and see what if I know what we're doing here and just take a second, because now I'm curious. So here's March 2nd, 8th, 9th, 10th. Okay, so there we are, and you're down below 30, and that was on the 7th. A couple days later, you broke it again the 9th, and then you put that bottom in. Okay, similar, not exact, way more extreme readings right now, which actually bodes well for us for a possible bounce. All right, now you can see how that's all connected. Let's get to some names, and I do want to get into some of the readings that are going on in the S&P itself, but I think that this is very important for us to drill into. So we're just going to start with what happened here. China basically came out today and said that they don't want the phones near their government, whatever reason. Maybe we're fighting with them on TikTok. I have no idea. Who knows? Maybe there's a reason for it. I have no idea. I'm just telling you what's happening. So we know that there's a lot of geopolitical de-risking going on right now, and I think that's certainly part of it. But we got to the top. We tried to break over. Always important to look for that higher high close. Never got it, did we? We never got that higher high close. We got this rejection. I actually was on both sides of this today. I went long because I'm looking at it and going, there's no way they're going to break down before this iPhone meeting. And there I go again thinking. So what happens? It starts to break down. I take about a 10-cent loss on the options and I buy puts. At the end of the day, it broke a key level for me. And once it did that, it became increasingly clear we were just going to go down. And when you start seeing things like this, where they just start walking you down, lifting you up, and you can't get over these little control bars, there's a lot more to it. There's another moving average I use. I'm not going to get into it all tonight for time's sake, but you start looking at this and they just start walking you down, and you can just start seeing them trying to rally you, and they can't. And then they just knock you down. This is exactly what, if you're trying to short, this is exactly what you want to see. You can't make higher highs. You could argue that, well, all you have to do is use VWAP. Okay, well, you never got near VWAP. So how would you short that today using VWAP? We'd have to do it off the open. All right, good luck. So you and everybody else, you need to find an edge that everybody else doesn't have, right? You can do it, but you need more of an edge. You don't want the same edge everybody else has, because then you're going to trade like everybody else. So something to think about. Now, if you take a look at this and you watch how we're acting right in here, what did we do today? We broke below the 55. I'm going to clean off my levels for a second because this is a really important lesson you might want to watch. We broke the 55 here. In order for us to break that trend and reestablish that, we must be above that level, whether it's support and resistance, moving average, whatever it is, we must be above it within 3 to 5 days. Did we get above the 55 within 3 to 5 days? No. We were down here forever, it felt like. Felt like no one was ever going to buy an iPhone again. Then we get above here, 1, 2, 3, 4. What happened today? 5th day. Okay, it's It's like clockwork. Why it's 3 to 5 days? You got me. But it's always this way. It always seems to be this way. And then if it stays above there over 5 days, that trend seems to revert. Maybe it's a full week of trading and that's what it is. I never really figured it out, but I did notice this pattern and it does work. So I cracked here. We're trying to hold the 12. The 22's here. Does that look like it's going to hold? We'll see. To me, no, it doesn't. Maybe we hold in here. Maybe. I think what's more fascinating is the bifurcation that I'm seeing. So what do I mean by that? Well, let's just start with the SOX. The SOX did not break today. Apple's breaking down. XLK, you're not breaking down, but Apple is the single largest component in there and it's breaking down. So what does that mean? And why is Microsoft hanging in here? So you start looking at all this, and to me, I'm just going to be blunt. We haven't even gotten to NVIDIA yet, and to me, this is confusing as heck. Then you start drilling into it and going, well, Dell hit all-time highs and closed at an all-time high on a beautiful 3-bar setup. I have to do a video on that. Or maybe I'll do the trade, and I'll work that in this video so that I can cut it out for later. But that's a very beautiful pattern. Essentially, you want 3 bars, 1, 2, 3. You don't want to be down more than 50% of this bar, preferably 25. Inside bar and then flip. This doesn't get any cleaner. This is actually a Marubozu white pattern, and has a greater, there's an actual edge to that particular pattern where it's like greater than 50%. So Bukowski has a whole book on these where he actually back-tested patterns. It's actually pretty fascinating. It is to me. Anyway, so you can see how this is playing out, right? All right, so what the heck's going on there? IBM, oh, we're at all-time highs. Oracle, 2 upgrades this week. Oh no, we're hitting a high with the market getting crushed. So you start connecting all these dots. Intel, which I had, sold for 30 cents when it took out the lower low, and this hammer undercuts me, pulls the flim-flam, gives me the low because now I'm smart, and then reverses back over, closing at a new high, and I'm out, going into a market tomorrow, right? It's really important for me to say this. You're going to make mistakes or you're going to get out of your stops and they're going to go higher. It's not a big deal. You have to honor the process. The worst thing that could have happened to me today was that I stayed in this when it broke my stop and I stayed in anyway. And then this takes place because I would think that is normal. And then one time they're going to catch me like this. So you have to honor your stops. I can always buy something back. I can't always sell at the same price, right? You have to control the risk. You can control where you sell. You can't always control where you buy. Make sense? All right. So if you take a look at this, it's something to really think about, but I would watch this tomorrow. So I'm watching this go on. At the same time, NVIDIA is imploding. Not imploding meaning we're below the 12 and we haven't been below the 12 for how long, but this was a drop. And this was not the drop that we hoped for. We hoped that we were going to flip that doji and go, but we cracked today. And these levels I gave pre-market. Hopefully you guys actually listened to them. I did well with them. If you did, please comment below. I'm kind of curious if people actually listen to the stuff that we go over. But we did this and I ran it on Twitter as well. I mean, you're totally locked in here. And we were talking about this 488 and how you couldn't break above it and how 482 was going to be your nemesis right in here. As long as you were holding that 482, we were fine. We talked about it right in here, bonk. And then you can see how it was resistance during that pre-market and then became support, tried to run the 488, and then we came into it. And once you cracked it, this is why it's so important for you to know your levels. I'll show you another trade in a moment here. But this is why it's so important to know your levels. This was one that we did today in the room. And for me, there was a really important level right up here. Let me just show you this. Where was it? It was that little bar right there. But I didn't want that because I didn't think we'd get to that because this was the control bar. So to me, it was actually down here to that opening price. And why was I using that opening price? Because this was down 1, 2, 3, and then I broke. And this bar led to this pattern, right? So I had to get through this pattern before I could even think of getting up here and playing with that. Nonetheless, they both got to roughly the same area, didn't they? So I'm splitting hairs, but I was looking at this. So what I did was I found a spot where it made sense. I will trade what happens. And now let me explain this. So here's where you have to get to. You have to get to a point where something can happen and you change your thesis. It doesn't mean if you're day trading, swing trading, long-term trading, but you have to be able to change your thesis. And if you're not able to change that thesis, you're going to get stuck. And I'm going to show you what I mean by that in a moment here. But I just think it's really important for me to get that out there. You're going to have to change your thesis, and you might have to do it midstream. For example, I'm watching this break. This was very clear that we were going to break today. It was very clear. I was short this very early this morning. We shorted it in the room. Candidly, I covered it at 250. I thought that that was it. And then, of course, it broke down a little bit more, as everybody can see. And we didn't really see much panic to cover it, did we? So this is me showing the chart, and I'll show you what I'm pointing at. I'm pointing at the fact that we cracked, that this is essentially a bear flag. And that's what I'm pointing at. And now we're cracking here. The RSI is breaking, right? This is what's happening real time. That's a 9 EMA. That's rolling. The volume here is starting to pick up. This clearly is going to take out the low, right? So if you wanted to buy puts, this is where you buy puts. Okay, I didn't do that, but that's what I'm looking at. You can see my comment here. Tesla broke. Let me slide this over just a little bit so you can see the timestamps right here. Tesla broke, this usually takes out the low. Okay, that's 12:47. 20 minutes later, this is what happens. That bar, guess what it does? It flips, takes out the higher high. As soon as it does that, it's on. Okay, so all they were doing was doing what? They were looking for supply. Okay, that's what they were looking for. They were looking for supply. They found supply right there. When they found that supply, that's all we needed to know right here. Let me pull that up. That's all they needed to know was that supply. All right. So once they find that supply, that allows us to go out there and go so much for new lows. Took a starter in Tesla, day trade. Let me see if it holds. These were overstock puts that we did well on today, but let's start here. So I map out the day trade and I just put the little alert out. I said it will cost me $1.25 to see if it holds, right? So this is where we're getting in. It's costing me $1.25, low of that bar, and that 9 EMA is where my head was. And then you just we start talking to this. We were talking about a bunch of people shorting that today. I actually went long that, made a little money surprisingly, but this is what we start to do. Day trade up, stops now break even. We're watching Apple start to break down, just watching the world go by. And let me get into some of these. There was zero panic for shorts to cover, which was somewhat troubling. And this was close those puts up. That's different. So then breaking out of the flag. Now here's Tesla. Here's the flag. And here's where we're breaking out and pushing into that level. Okay, so watch the 251.89 level. And this is what's important about this. I already knew this level. I already knew that it was marked off. So what I want to do is have positive slippage. Let me show you what I mean by positive slippage. This is a great example. If I know this is my level, do I want to be selling here into my level, into that, or do I want to be selling here? Okay, I'm trying to get the highest RR, right? So I am going here and I am selling some, if not all, into there. And then it's up to everybody to make a decision on what they want to do. But the point that I was getting at here is we were far from out of the woods, and then I'm just pointing out that Dell's getting ready to go, which it did, and then you just see that setting up. But the point that I'm getting at with this, let me just get into this. Now you can watch it here and see how it did. Rejects, tries to hold this one level. Doesn't really matter because it broke. So if you're in, great. If you're holding that level, that's fine too. But the bottom line is, because I knew where that level was, and I knew it was up here, I was able to sell into it instead of sitting there and waiting for everybody else. You're able to sell into these levels. There's a really important distinction there. You might want to listen to that again, especially if you are a short-term trader. If you're a long-term trader, it might not matter as much unless you're going to do hourlies if you're swinging. But if you're a short-term trader and your stops are $1 and you're trying to make $2 out of the market, you need positive slippage way more than the guy that is swinging or going very long positions out 3 months or a year. You have to work on that. So I find this interesting that we're watching this guard crack though, like we're watching the Teslas of the world. Let's get back to it. Hopefully that was helpful. Please comment below if that's helpful. I don't have really the time to do full educational videos and do full walkthroughs. I find that much more helpful. So you're watching Tesla and we're boxed in here. Now look at this box. Here's a 1222 cross. We can all see that cross right here. We can see the 55 right there. I mean, you're boxed in there. We're just in the middle. We're the birdie and they're playing badminton with us. I mean, you can see that, right? This is when I bought and then I got stopped out here. And this is when I thought that, oh, it's definitely going to crack. And then what they do, rent at $10. And then everyone said, oh, well, it's really going to crack this time. Now you have a hammer. Okay, so this is what I was saying earlier. We don't know how much we're going to break down. Remember, we're going back to the ES and how oversold we are now, right? So we look at that, and then we look at some of these other names no one's talking about, like AMAT hitting all-time highs today. There's a lot going on here, and there's a lot that we really need to pay attention to. We start looking at some of these pot names. You have AAPL, which is the REIT for pot names, and they're breaking out. They're having a little flag going here. So something that you might want to pay attention to. I think these kinds of names are really what we want to see. There's a couple other things I really want to get into. to. I do want to drill into these home builders. I'm short a bunch of these guys. I've puts on them, puts one against me today because this moved up a little bit. I'm looking out weeks on this. This is a clear break. If I start getting over that 55 here, I would become concerned, but I just don't see that. I just don't see how that's going to happen. And I do want to point out some things that I think are absolutely glaring with the S&P. Number one, and we go over these levels a lot, but let's get rid of all these lines. Number one, if we talk about the stocks above the 20-day moving average, you're going to see a couple things. They're pretty much holding. We're not really doing much on the 20, which is more of your short-term or medium-term level that you want to watch. We're not really fighting there. Where some of the battle is starting to really go on that is concerning is here. And this is what we have to watch, above the 50. I do not want to make a lower low. Right? This is very important that you watch this. SP500, you can watch this for free. I do not want to make a lower low. I do not want to change my trajectory to this during this period of time, which, you know what this coincides with? The dollar. This coincides with the dollar when it made a golden cross. If you go and take a look at this versus where you are now, right? So I don't want to start breaking this. I don't want to start making lower lows. This would change the structure of the market. We don't want that. If we drill into the 5-day, you're going to see something that I think is absolutely glaring. Every time on the 5-day where we get down to this 9, I actually even have an alert set on it. So when we hit this 9, that's usually when we put bottoms in. Well, you're darn close to it. Okay, if you had to say short term, if 22% of the names are below the 5-day moving average, well, you really can only get to about 9. I mean, you can get lower, but it's pretty rare to get there. So that's definitely something for us to watch, and I would pay attention to that. And the big one that we really have to pay attention to, we must pay attention to this one, is you cannot break this 200-day moving average. Every break up or down of this leads to outperformance or underperformance. You can go and set your watch to it. It's crazy. Like, this will literally be the peak of August 22nd that happened. So it's absolutely glaring, and it is an indicator to me that is leading on where the market's going. In other words, you're not going higher if you can't get above this. And this is where we just had the battle. I do not want to see the structure change. I do not want to get here and then break and get below 50 because we'll have underperformance. Why all this is important, the one thing that I think is glaring, and we have gone over this before, and it is somewhat troubling to me, is that every time we get to this 90, every time that we've gotten to this 90, we go back, we can go all the way back to here, which is 19, because you don't get up there very often, right? And that would mean 90% of all stocks are above their 50, 2, 3, 4, 5, 6. Say it. Every time you do that, before you get another 90 reading, you're getting one of these 10, 20 readings, right? Say it, 90, then you get a 20. Before you get to that 90 again, what are you getting? Like a 5 or whatever the heck that is. And then you do it again, 90, and then what? Okay, 90, and then you get a 20. 90, I'm at 40, 34, okay? I'm not saying it has to happen. I'm saying that from 2019 to date, every time I've had a 90 reading, I'm getting into the 10s or the 20s, and I'm not there yet. That's it.